Let's dive a little bit deeper into the action right now with all of our markets reporters. Abigail, why don't you get us started?
Well, Romaine, stocks did rally into the close, but really rallying on the day. Gold, take a look at this intraday chart of gold, up 2.1%, the best day of the year since October of last year. That, of course, follows yesterday's roughly 2% fall, the worst day since 2016. So the bulls and the bears really duking it out. Now, there's a lot of attention going to the fact that gold has taken out important technical levels, and it has. It's above 1375, it's above 1400, but it is not above the true top of the range that goes back, that followed the gold crash back in 2012, right around, let's call it 1430, 1440. You see this huge range over the last number of years that has had both the bulls and the bears frustrated. Exciting the bulls more recently is the move above those important resistance levels that I looked at. Sarah, this is a weekly chart. That candle, without getting too wonky, has actually confirmed gold for a move back down to 1360, the pink line. All of this suggests that we could see gold drop back down, not just to that level, but perhaps touch back down toward the bottom of this range. So the gold bulls may just have a little more frustration ahead. And if you play that forward, it may suggest that the dollar could strengthen, and maybe we are going to be entering a little bit of a risk-on period if gold does in fact pull back. Sarah.
Thanks, Abigail. Well, talking about risk on, you look at the stock market today and the S&P 500 once again putting in new highs. But where we have not really seen a move higher is in momentum, that at least by way of a relative strength index. If you take a look at the 14-day RSI on the S&P 500, it still stands around 67 or so. There you see it, still not through that 70 threshold that signifies markets might be overbought. There at the bottom in red. So how uncommon actually is it for stocks to make new highs when momentum isn't running rampant? And we looked at this, and the fact of the matter is it's really not that uncommon. If you look at the past 5 times that the S&P 500 has made new highs, but with a 5-day period beforehand where it didn't make new highs, so not sequential highs, you can see that 4 of the 5 times the relative strength index was actually below 70. And this most recent new high that did come yesterday was only at 66. That was the weakest momentum reading of them all. So you can take this to mean potentially that this rally that we are seeing is truly unloved, but also maybe it is actually for the better that we are seeing some steadier, calmer gains.